again from Sprott Money and SprottMoney.com. We're now about halfway into the month of October, and what a month it has been already. It is time for your Ask the Expert segment. I'm your host, Craig Hemke, and joining me this month is my old friend Josh Phair. Josh is the founder and CEO of Scottsdale Mint. And with everything going on in the world, I thought, great guy to get his perspective. Josh, thank you for taking some time.
Glad to be back with you.
It is, of course, there's some Scottsdale Mint product you can find at SprottMoney.com. You can find all kinds of things at SprottMoney.com, especially now. It's time for the fall big bullion sale. Go to SprottMoney.com. You will find silver there for just a couple bucks over spot. They will sell it to you, and that's a pretty good deal as long as you can still find some. It's getting harder and harder, it seems, these days. SprottMoney.com. Provider of all this content. Thank them by checking out their site whenever you are in the market for physical metal. Josh, like I said, you are CEO of Scottsdale Mint. You are a great follow on Twitter X for anybody that is on that platform for financial information. Josh Phillip with one L, Phair, Phair is your handle. Josh, I was trying to think of where do you start. We're recording this late in the day on the 15th. It is already, it's been a crazy month. It's been a crazy week. We've seen price get shellacked a couple of times in London this week, only to just rebound and recover. Went out on the highs today. We're now over 52.50 in the futures market. We're over 53 in spot. Josh, let's just start. I'll just throw the floor to you. What do you make of all this?
I'd like to say I can predict everything, which I cannot, but I did see this coming. Was probably talking this summer that there's a metal war that's going on. There's a race. There's a race for metal above ground and below ground. So I think what we're seeing also at the same time is like when you have, and I've talked about it as well all year, is you've really only had pretty much, I'd call it the central banks and the huge institutional players that have been clamoring for gold. No one's really messed around with silver yet. And so that was, let's say earlier in the year, everyone felt like, oh, is silver being left behind? And I was like, just wait. And I think we're in a situation where at the end of the day, things go up or down depending on buyers and sellers. And so we're in a situation where there are now more buyers than there are sellers. And it's starting to overwhelm the marketplace, and people forget silver's kind of small. And it started to get disrupted with tariff issues. So a lot of people are moving their assets into their jurisdictions. And so in the event of who knows what could be coming, is it a World War III scenario? Are we going to be in a situation where certain nations aren't trading anymore? And my take there is, I think Trump and the tariffs is preparing and trying to harden the U.S. and their trade partners to move away from China. So if we went to a kinetic war, neither side is going to be allowed to trade together anymore. So how do we? That's not an overnight thing. So you start to see it all. And so now I think the buyers are just overwhelming the sellers, and it's not even speculators. That's what's kind of crazy about this. This is silver's made a heck of a move, but I still feel like we're fairly early, believe it or not.
Yeah. It's interesting because that's been a main question on my mind and at my site is, are we just topping out again at 50? Are we going to blast through? Is silver just simply now going to playing catch up to gold? I mean, gold started making new all-time highs 18 months ago, and now it's almost doubled basically since then. Will silver now make all-time highs and double in the next 18 months, or is it just going to roll over again? And it's the situation, Josh, this whole year where we had in February, March, and April, these big premiums of the futures price got way ahead of the spot price, and all this metal flowed into the U.S. You had these huge delivery months on COMEX, most deliveries ever seen in February for gold. But now we've seen the opposite in silver. Can you connect that? Is that part of what's driving price too? Is that physical metal situation?
Yeah, a lot of silver came to the U.S. too, and I think the COMEX vault inventory is at some of its most recent highs. So it's been holding a lot of silver here. And then you kind of look at the LBMA's status and that they're kind of thin. And so a lot of people are
Hmm.
like, is London having an issue? The issue is here. And so, yeah, so it's the US does not have a shortage of silver. And I'm talking industrial, raw material, etc. London does. And so the banking system in London is very much predicated off of leasing and trading. It's more of a banker's market than it is a physical market. So when the physical market's not there anymore, that puts pressure on those that are leasing it out. And leasing doesn't necessarily mean there's anything wrong with it, but if you're leasing a product in the US, you can't lease through the COMEX. So someone actually a bank has to buy that material, pull it out of the COMEX, and then they may, loan it, do that sort of thing. Well, in London, it's much different. It's just think of it as like it's a big pool of assets. And I think the reality is people are wanting more and more metal, not in London anymore. So you've got the BRICS countries, you got China, you got other people that are pulling material out, and then a lot of materials coming to the U.S. So the old adage of "go where you're treated best" is very true, not just for people but also assets. So that that market, where the U.S. was paying a premium because there were buyers here in the States, not retail. Retail has not been participating in gold and silver for the last 2 years. It has been a selling market. And so refineries have been overwhelmed with the old 90%, coinage, just call it your random secondary 10-ounce bars, 100-ounce bars. There's been so much of it. The refineries are so overloaded with silver that they're 2 to 4 months out. So it's not just the metal, it's also that they don't have the financing anymore. They're tapped out. And they're tapped out for a few different reasons that we can get into as well.
Well, let's do because you kind of boots on the ground running Scottsdale Mint. I started hearing these stories last week. I had people on my site saying, these refiners aren't buying any metal. They've shut down operations. They're not. I mean, even the people that want to go sell grandma's candlesticks now that price is an all-time high, nobody's buying that stuff, which seems kind of counterintuitive because there's the price is saying that there's a shortage, at least in London.
Yep.
How does what's behind that, Josh? What's the math from a dealer standpoint? What's behind them not wanting to take any inventory in?
So in a normal world, and we'll kind of go to, like, I would say the strip mall, the guy that says coin shop,
Yeah.
all the way to the retailer guys. Those are, like coin shop in your local town, they're doing estate sales, people are coming in. And if there's more sellers than there are buyers, they then have to sell that wholesale because they get
Mhm.
tapped out. So maybe a little guy, maybe he's got 50 grand, maybe he's got a few hundred grand, maybe he's got a couple million. When he has too much inventory and he needs cash to buy the next guy's stuff, well, he flips it to a wholesaler somewhere. The same thing happens with pawn shops. They get scrap goods, all that goes to aggregation, and aggregators eventually sell to a refinery. Well, all along the way, people are paying cash on the spot, or they're writing checks. They're sending bank wires right away. And so it goes from a cash market, and eventually someone has to finance it at the far end. And so as long as everything's working, if we go back to COVID times, there was not enough metal coming in. So these coin shops and the strip malls, they had to go buy from the wholesalers or companies like mine who make new product. They had to have that new product on the shelf so when customers walk in, they could sell it. So we've been in an absolute a selling state where retail has been exiting silver and gold. They think it's too high. They think
Mhm.
it's great. Now, other people might need precious metals. Look, the economy, inflation, things are expensive, and metals are up. I think a lot of people are like, hey, it started around 35. 35, that's a high price in silver. I'm out. And here we are now over 50. So in that normal situation, that's how metal kind of flows up. And then the refineries, guess what they do? They then turn that into a COMEX deliverable bar that then ships into the exchange, and then they get money back for it. So in that's when it kind of goes up and flows. So the banks have essentially been sucking up a lot of the silver and gold over the better part of 2 years now. Something's changed though, Craig. So while there still are sellers out there, absolutely, buyers are now stepping in. So it's almost like a new class. So there's a lot of people probably watching this show. Maybe you were around in single digits. Maybe you bought during COVID when it dropped into the teens, or you bought in the 20s. Or other people are just like, I'm out. But there's a lot of people now that go, man, where is silver going to go in the next 5 years? And they're looking at it. And I think if we start looking at inflation adjusted numbers of 1980s $50 high, you've got another 4x ahead just based on that. And so I think new investors are stepping in. So suddenly there's competition for silver there. And then what's happening is the guys in London, they need their silver. And so they're not willing to lease it out anymore. So that lease rate, which is normally, let's say the last 20 years, 1-2% a year on average. Overnight rates, short-term rates are going, they've been averaging between 40, 85, even as high as 100% annualized. Now, that's, and you go, well, why would anyone pay that? Well, in a normal world, metal is financed through this London leasing program, both gold and silver, very economically. So they'll take a jewelry company, a big manufacturing company, or a refinery, and a bank will say, I will floor plan all your inventory, but everything has to go through me, the banker. Well, that's great when they're giving you good terms. In a situation now where the bank goes, well, hey, London's paying me more money than you are, so I got to charge you more rate. So they're basically, people are having to sell silver to the banks to release it because they don't want to pay those interest rates. It's now going back to London. Or let's just say you're a company who is buying more and more silver, for whether you're making semiconductors, medical equipment, brazing wire, whatever you're in. It's not just the bullion guys, investment guys. You might go, you know what? Rates are a little high. I'm not going to buy any extra metal right now. So think of it like it's causing all the metal to really flow to London. So now people it started probably around Thursday of last week. People are actually pulling silver out of the COMEX. They're financing it though, putting it on airplanes. On an average, you're probably talking about $75,000 to fly 300,000 ounces of silver on an airplane. So their cost of transport and finance has to be less than what they're going to get paid for in silver and for that deliverable silver in London. So that's what's driving it. So now you've got gridlock at a lot of the manufacturing companies. You've got gridlock at the refineries, the ones that are all banked heavily. And so companies like myself, while we have lease facilities of in particular gold over in Europe, that's not how we run our manufacturing in the US. So we're not affected by that. So we're able to keep things flowing. So we're getting very, very busy on our side. And there's a few other players in the industry that are more well-heeled, let's put it that way, and aren't subject to the whims of what's happening with the banks. So that's kind of what's causing this. And now people are buying. They are buying Silver Eagles again. They are buying Maple Leafs and silver bars. And so that's starting to dry up. So you're going to start to see, the marketplace change dramatically here. And it's happening so fast. I don't even want to tell you some of the phone calls that I've had from people that deal in this, that need product for sure. So this is pretty wild.
You use the term gridlock. It seems kind of broken. Not that it can't be fixed. But if all this metal flowed into the U.S., both gold and silver, back in the first 3-4 months of the year, I mean, we watched it go into the COMEX vaults or whatever. We heard these stories, the guy from StoneX saying it was a couple thousand metric tons of gold that came over. And so now that has left not enough, well, let's just say silver for sure, in London. That can you move this process along enough that you can actually fly, a plane load that's only 10 metric tons. I was doing the math as you were talking, not even 10 metric tons. Can you fly enough over there to mitigate it on that end? But now if on the other end, you've got refiners that are kind of getting behind the 8 ball, if people are stopped taking in new inventory just at the same time that retail demand is picking up, seems like it's just a real pickle, I guess. Am I missing something?
It is. I think that just goes back. It's a supply demand equation. And, one of the things that happened during COVID, the moment we had shutdowns, every industrial player tapped their entire credit line and they bought as much gold and silver as they could, which totally makes sense, right? Especially the guys that were making freezers, and they needed silver and gold, and you did not want those supply disruptions because
Right.
there were situations where, hey, metal might be coming, but it might be a month or two out. So you just grab more than you needed. So that hoarding component can cause issues locally. So right now, what you've got is you've got hoarding happening now in Europe, and then you've got people have to dishoard because it's not financially feasible for those that are financing in the U.S. So I would say, Craig, there's a chance this gets rectified in another week to 2 weeks. It could also just keep going. So I think it really comes down to how much metal is loosening, how much gets delivered into London, and does everything kind of get rehealed again. But if demand keeps picking up, you could have everything corrected, but yet silver just keeps going higher and higher and higher. So,
Yeah.
but we could also get smacked, and we're going to have some extreme volatility to the downside at some point as well. We've seen things like this. If you've ever seen the rhodium charts, during COVID,
Yeah.
we see these micro. Those are smaller metals, and so
Right.
we always talk about the silver market is pretty small, but it's still huge. Whereas if you actually look at rhodium, ruthenium, iridium, those are only a handful of trading houses that move this material. It's not quoted anywhere online. Everyone calls on the phone and they hit a price that they're willing to deal with each and every day. Silver market is much different. And then I think there's another factor that's probably been less underreported. And you've probably heard this in the past, but a lot of the world doesn't view silver as precious. They view it more of
Right.
like copper. But the higher
Right.
the price gets, it starts to interest, let's say, people in other economies. They start to think of it more of a precious metal. So I think we're getting a factor there now. You're seeing videos in China of people clamoring for gold. So
Hmm.
are people going to be clamoring for silver as well? So, gold now, $4,200. Oof, that's expensive. So you look at that gold silver ratio, you're like, man, silver's a deal. So I think you've got new population centers who become investors in something that they weren't maybe participating last decade. So I think that's an interesting dynamic that's driving things as well.
So, in the short term, Josh, I mean, prices were already rallying. I mean, we had this great month. Price of gold broke out above 3,500 on the 1st of September and immediately targeted 4,000 and beyond, and fine. And so silver is tagged along as you'd expect. It's just gotten this goosey stuff in the last couple of weeks when I think it was the October the 2nd when all of a sudden we went from about a 20-cent premium of futures versus spot the way you'd expect to all of a sudden a backwardation where it was the opposite. And then that widened out. Last week, I saw it as much as like 275 last Friday. There's a long way of asking you what is a short question. What if this does get resolved over the next couple of weeks? What do you think is a signal that would show it's happening? Is it that spot price getting back under the futures price? Is it those lease rates coming back down? Is it the borrowing costs, for people that are trying to use the SLV as a flywheel? I mean, what do you think are the things to watch to show that it's actually, that situation is resolving?
Probably all of it. And we've even seen it a little bit today where we've seen that gap
Yeah.
between
Hmm.
futures in London has narrowed a little bit. So I think, and then I'm going to say this, someone is squeezing London. And if we take, if you watch the movies, about, the drug dealing movies, you never kill, you don't want to kill your customers. So I think,
That is pretty
and I'm
quick.
not saying all bankers are like drug dealers.
Josh Phair says all bankers are like drug dealers. I'm
Don't
sorry.
put me on record on that.
All
But if
right.
we just have to think of it, they have to make money off of their customers. Sometimes too much,
Yeah.
sometimes. So, in this situation, someone's getting really squeezed badly, and someone's
Mhm.
making a lot of money. So I think we're in a situation where, uh, they're going to have to release the pressure at some point. So you got to, and then they're going to do a squeeze again. So that would be my prediction. So what to look for? Probably all of it. But for someone who's dealing in the physical metal, it gets very difficult because the the bid ask prices, because of all the volatility, they're widening because there's just extreme risk of
Right.
buying and selling things, and you'll have to continuously replenish things, on different continents. The pricing's different in Europe than it is in the States. So it gets kind of interesting. So I think when we see that, if the volatility and the spreads start to tighten, that means we're kind of normalized at least a little bit. But that doesn't mean we can't go again. It feels like this is going to be a longer term thing to me. If I really, even though it might be mainly resolved, but that doesn't mean that I think, Katie bar the door again. Here we go. It's just,
Yeah.
I think it'd be healthier for the market if some of this could resolve, and but that doesn't mean that's going to stop the price, if that makes sense.
Right. I mean, what happens when we get back to the normal stuff driving it? Next year I've been writing about yield curve control and whether they might somehow try to monetize, like Trump has said or Besson has said, monetize the balance sheet, that kind of stuff. And
Yep.
we're not. This could be kind of tangentially related to that, because that's I guess my last question. You watched all this metal. You got famous. Not that you weren't already famous. I mean, look at you, for crying out loud. However, you started your Twitter account just earlier this year, and now you have 38,000 followers. And right out of the chute, you had a video talking about kind of, well, the opposite of this situation, but it extends into today about the metal flowing out of London to the US, and now it's flowing back. I mean, it seems as if it's an extension of the same problem. What if there is just no metal to ship back? I mean, what again, how, I guess ultimately, um we'll watch what's going on at present with all the lease rates and stuff, but I would imagine you're preparing for more of the same kind of structural issues going forward.
So I have a degree in risk management, and so I look through the lens of risk mitigation as much as possible. So, like in my manufacturing company, the amount of redundancy that we have, equipment wise, different things, so we can keep our customers flowing. The same thing with metal procurement. So we don't just source out of one country or one region. We try to source from multiple really good partnerships, really good jurisdictions, and we're going to see we're going to see problems. We're going to see probably continents or people that you can't trade with anymore because it's only moving in. You're seeing, the BRICS nations are. It looks like they're building their own gold settlement layer that the United States might not be invited to. What's that look
Mhm.
like? So this, I think the dynamic here is that you have to be nimble. You got to be as careful as you can. So, what my company did and how we grew a lot during COVID is we never sold product that we hadn't secured physical metal for. So, I may have told some wholesalers and some people it might be 2, 3 months, but I have secured that material. I have already purchased that material and it is coming to me, and it's from a known, it's not like I'm just guessing I'm going to find it. So that we were able to get through that tough time and deliver every single ounce. And so that's where I think a lot of times, if you can't do that, and I respect the companies that have to say I have to turn off my trade desk, and that's okay. And so we've done that before as well. If you can't secure the physical metal, you have to hit the pause button until you can kind of sort it
You
through. So
can.
that's the role we're looking at. So I think it's just making sure you've got those partnerships, those relationships, to make sure you can, get through the good times. And meanwhile, for most people that are watching this is just more, I call it, industry's chat of what's happening. But what does that mean? On the retail side is buy from places like Sprott Money, and my company does a lot of work for them and makes custom products for them as well. And is buy from reputable companies that have been around a long time, that you've done a lot of transactions for, and so I think that's what, as a retail buyer, it's a good time. It's a good time to be, involved in the game, and hold it. And really, realistically, Craig, what else are you going to buy? AI companies that are just trading. They're just trading their own deals back and forth and money back and forth, and they're huge, at huge unknown multiples. I think the world is, and I think that's why, silver is going up again, because where do you put your money? Where do you put
Right.
your capital? How do you allocate it? And you want to hold things that everybody wants. And so I think we're in a situation where everyone needs silver for industry, including, the EV companies, the solar companies, the electronics, AI, computer chips, military is coming. So, all these things are needed for something, and so it's a nice place to just kind of hang out in.
And like I always say, yeah, maybe if you got to sell the candlesticks to get some cash to go to the grocery store, that's one thing. But other than that, what do I want to turn my metal back into dollars for? So that gets kind of into a hoarding situation. I think in the end, Josh, what you're saying from a physical standpoint, this is not 1980 and it's not 2011. And I think the people fear, yeah, we might get a price setback. I'm sure we probably will. Nothing goes straight up, but this is a whole new world. This is a whole different supply demand situation and physical stockpile situation. Let me put it that way. So if you get a pullback, it's probably just a bump in the road that folks should utilize to add to their stacks.
Yeah, I would agree. We could be sitting back and look like waiting for that huge dip to come, and it never comes. We could, or it could come here after you publish this video.
This evening.
Yeah, that's a tough spot. I think people have been looking for dips since we left the 30s, and this is tough. It is tough to know, and everyone just has to make their own decisions the best they can.
Yeah. Well, Josh, it's been fascinating to visit with you, and I know everybody appreciates your perspective. Again, so thank you again, Josh Phair, CEO of Scottsdale Mint. You can go to scottsdalemint.com and see the work they're doing there. You can also buy Scottsdale Mint products at sprottmoney.com, who, of course, is the sponsor of all this information. So make sure you keep them in mind as you're looking to add to your stack, but also just keep an eye on this channel. It's only middle of October. I don't think the volatility is going away. We got a lot more content coming for you as the month goes along. So make sure you hit that like or subscribe button on your way out so that you're notified every time there's something new. Josh, thank you so much. It's been fascinating to visit with you.
Yeah, how long have we known each other now?
Josh, I don't know, a decade plus.
Yeah, it's probably about right.
I mean, we're all turning into the wise old mavens of this deal. We've seen so much over the last 10 years. Don't you feel it makes you feel a little more skittish than it was back in the day, right? Because you've seen so many other things in the past. But man, not that this time is different, but there sure feels like there's a different set of fundamentals this time.
Yeah, and it's kind of sad too. I think of like people that brought me into this industry, guys like Jim
Right.
Claire. I used to fly around to hear him, to meet him, to talk with him.
Yeah.
And obviously he passed away a couple years ago in his 80s. But it's almost like a passing of, like, I would love for them to see what we're seeing today.
Yeah.
And maybe not how bad some part of the world, but there's some good things in the world, including metal prices. So
Yeah.
we've got a few more gray hairs for sure.
We're adding them by the day, brother. That's for sure. But let's do this again soon. You're a great resource to have on hand to fill us in. And I know from everybody watching, we all appreciate it.
Great. Thanks, Craig and the team.
And from all of us at Sprott Money, sprottmoney.com. Again, keep an eye on this channel. We'll have more information to come as the month of October continues.